Well, happy St. Patty's Day. Want to bring you the latest data here in the Austin metro area. 2.5 million people. No, we're not talking about my subscribers, but Austin, for the first time, has topped 2.5 million people. And despite the fact that the headline says that it's slowing down, we are still one of the top growing metros in the US. So just last year alone, Austin grew by 2.3%, which was 58,000 net growth in people. That brings our metro area up to 2.55 million. We're still obviously much smaller than Houston and Dallas, which are well over 5 million. But Austin is definitely growing, and we're getting very close to San Antonio. So the Austin-San Antonio metro area is definitely starting to approach as a whole kind of that DFW or Houston area in terms of population. So yes, the decline, it went down a little bit, where during 2023, we were growing at 62. Now we're at 58, but still 4,000 people difference, not huge, but we're growing again a lot. So where are the people going? So Travis County, which is our main county in the metro area, it's where Austin is, along with our east and west suburbs, that isn't growing quite as fast. It's more expensive. And so that's only growing about 1.3%, but the suburbs, north and south, especially Williamson County, Hayes County, they're growing at about 3.7%. So what's happening is, 2/3 of those people are going to land in the suburbs. So they're going to land in Williamson County, which is, Georgetown, Round Rock, Leander, Liberty Hill, Hutto, Pflugerville, some of those areas. Or if you go south, Kyle Butte, San Marcos, Dripping Springs. So they're landing in the suburbs. So the census data, oh, this hurts. We were number one in the country for 12 years in a row, but we just slipped to now number two. Oh, I can't believe it. All right. But anyways, yeah, tough story, right? So Austin still remains one of the top two fastest growing metros, second fastest growing region in the country. But again, we had a 12-year streak going. We're now number two. So sure, we're slipping. We don't get the gold medal anymore. But I think Austin is still seeing a lot of growth. So let's talk about the market. So if Austin remains one of the fastest growing metros in the country, well, then why is the rental market softening? Why is the housing market softening? Two reasons. Number one, a lot more supply and weakening demand. When you add more houses and fewer buyers, you're going to see prices soften a bit. And so anyways, this is closed sales. This is not price. But this is looking through February. The red line shows you 2025. And if you compare that to the last 4 years, we had fewer sales in this February than we did the past 4 Februarys. If I go through some of the data, this is the numbers here on the right. So in February, sales were down 18.24%. So that's a lot. That means we had only 4 out of every 5 homes compared to last year kind of sold, in terms of number of closed sales. The average sales price was up a little bit in February. Why is that? Well, to me, that says the higher price points, which pull an average up, are probably doing a little better. We're seeing people that do have good incomes, people that want to be in those desirable school areas or really higher end neighborhoods. Those actually are selling okay. I think we're seeing that kind of middle class, the ones more struggling with kind of the day-to-day paychecks, probably having a harder time trying to, get the money to buy a house. And those houses may not be fixed up as much. And so that also means they would have to bring more money to fix that house up later. They're struggling with that. Those are not selling as well. Overall, median sales price down about 3%. So not dropping off the cliff, but still softer than we saw last year. This was the week of March 2nd through the 8th. So again, just 2 weeks ago, listings were up. Listings up 7%, sales down 8.5%. Months of inventory still climbing. Median sales price about $430. And then of just in that week, 13%, almost 14% of listings made a downward price adjustment. You're going to see that. That's pretty typical when you have high supply and weakening demand. So if I go all the way down here and I look at kind of historical listing and pending data, the top is listings. And again, 12,500 listings. Last year at this time, we had 10,000 500. And so 2,000 more homes in the metro for sale right now than we did at this time last year. And that is more than we've had since 2010. Now, the caveat is back in 2010, we were about 800,000 people smaller of a metro. So I don't know if the percent of listings is higher than 2010, but just the general number of listings is higher. And again, if we go to pendings, last year we pended about 2,600, which was very anemic. It was the only time that we were under 3,000 in February was last year until this year. And we sold another, 250 less than last year. So again, we're just continuing to see that slowing demand on the sales side. I think we will start to see those numbers and this increase in sales start to pick up once we get through March, April, and May. These next 4 months with the warmer weather, with the higher inventory and with rates doing pretty well, I expect we're going to see more buyers come into the market. The question is, are sellers going to outpace the buyers? This is going to give you a clear picture of where we are on inventory and sales. So this is the number of active listings, those are green, versus the number of sales, which is blue, actual closed sales. So this is the last 2 years. So if we go all the way back to January, in fact, this is, January 2023, we had 8,900 homes for sale. We go to January 2024, we had about 9,000, but we go to January this year, and we have 10,000, almost, let's see where we are, 10,500. So we've got more homes for sale to start the year than we did the past 2 years. You can see listings will climb through late summer, and then they'll drop off in the fall. Listings will climb through the summer, and they will drop off in the fall. They're either selling or the sellers are just taking those properties off the market. But if we look at closed sales, they're going to peak every year pretty soon here in May. This is when buyers buy right now, March, April, May, June. So this is when the market should see an increase in sales. They peaked out in May 2023, about 3,400 sales. We peaked out last year about 3,200 sales. So even though we had more listings, we had fewer buyers. And we're on pace to see that again. You can see these are kind of going up, kind of the inventory is still building a little bit. What's going to change that is either going to be more buyer demand, just something changes either in the sentiment or the economy, or we're going to see rates kind of like a magnet pull buyers into the market because they start to get more attractive. So we're going to be watching that. Let's talk about, I'm going to go ahead and jump to rates before we get to the rental market. So this is interest rates right now. So we're sitting about 6.81%. If you're a good primary home buyer, you're probably in the mid sixes. And FHA, VA, again, you're probably in the mid to lower 6 range. Let me show you what this looks like. Sorry for the headache there. This is the 30-year fixed rate mortgage since the beginning of the year. When we started the year, we were above 7. And by the time we got to mid-January, we were about 7.25 on the interest rate. And we stayed above 7 to start the year through basically February. So why were sales down? Interest rates just weren't great. And buyers didn't want to do it. The weather was cold. Now we're starting to see it change. We've seen interest rates come down. They're now, on average sitting around 6.75. They have for the past month. And on top of that, we're finally getting into the spring selling season. So we're going to be watching rates. We're going to see if that rate can stay here or even if it starts to soften a little bit. I think that will increase buyer demand. If for any reason rates go back up, it's gonna slow things down, and that's not fun. But keep an eye on the rates. I think we're at a really good time here where if rates do improve, I think that will improve the market. Here are rent stats. So here's what we're seeing in the market. Top area is single families. The bottom half is duplexes. So rents also have been slowing down. And you would think if one slows down, shouldn't the other one pick up? But there's, again, a lot of supply in the rental market. This town has built apartments. And so unlike a lot of metros in the country, we have built lots and lots of apartments. And that has helped to absorb that supply. Just to give you good numbers, in the last 2 years, we've added over 60,000 new, not above the existing, but new apartments to the market on top of what already existed. So even though we're bringing 50, 60,000 people a year to Austin, we can suck them up. We built plenty of housing for them. And so what's happening is it's not creating enough demand because we have enough supply. We're one of those markets, we have enough supply. So single families, we've seen rents continue to decrease. They did last year. They're doing it this year. Not aggressively, but again, a couple percent. and 52 average days on market. That's almost 2 months now to get a single family home leased out. Pretty similar to last year. But again, we're just not quite yet seeing the rental market get back to a demand stage. It's starting to slow down. Duplexes have had a harder time. And I think duplexes, again, if you know the duplex stock in our market, it's not as nice. A lot of them are beat up and old. And so, if you can go live in a newer apartment for $1,700, do you want to go live in a beat up duplex for the same price? Maybe not, unless you have pets or some reason maybe you need that garage for storage. But there's a lot of compelling newer apartment stock. So it's putting a little downward pressure on the duplexes. The nicer duplexes will likely rent faster. Finally, wanted to share this with you. For those that know Austin well, we have a big neighborhood called the Mueller neighborhood, which was the former airport. So they decommissioned the airport in the late 90s, and they started Mueller 20 years ago. And so this article was in the Austin Business Journal, just talking about how it's been a 20-year effort to remodel the airport. It all looks new now. Everything in there is new. It's like a mini city. It's very walkable. You got office, you got retail, you got the children's museum, you got parks, you got the Dell Children's Medical Center. So they've done a lot inside of Mueller. And if you're not familiar where it is, I'm going to zoom out a little bit. Here's downtown Austin right here. And if you just go maybe 10 minutes northeast, it's on the east side of I-35. University of Texas is right here north of downtown. It's kind of just catty corner northeast of that. But they have really redeveloped that area. This is the boundary of Mueller right here. You can see the park in there, the Thinkery Children's Museum. It's really nice. It's expensive. There's lots of single family and townhomes in there. They're pricey because it is such a nice area. But what's happened is it's really revamped, almost like in concentric circles going out from Mueller. Kind of the wealth factor of East Austin. It's been a big improvement for that area. So anyways, if you haven't been to town, check out Mueller. That is a really cool neighborhood. All right. If you are a seller right now, in this last week, this is spring break in Austin. We saw a lot of sellers coming to market this week, getting that house ready. They want to be out for kind of peak season. That's a good thing for who? The buyers. So if you're a buyer right now, this is peak season. You're getting the best inventory that you're going to have over the next couple months coming to market. And there's going to be a lot to choose from. If you are a seller, you really have to be aligned on your condition and your price. And we need to be hyper aware of what your competition looks like, because buyers are going to see on average 10 to 30 homes before they choose one. So we want to look at everything that they might be looking at to figure out if we've positioned ourselves correctly in the market. Anyways, hope this was helpful. If you want to follow our videos each and every week, make sure to click that subscribe button on YouTube so I can get to 2.5 million, but I'll start with 150. Let's get there. So anyways, if you want to click that subscribe button, follow our videos, I'd appreciate that. And of course, if you know somebody looking to buy, sell, invest, or finance in Austin, because I'm also a licensed mortgage lender, make sure to reach out to us, and happy to connect with you. Anyways, hope you guys enjoy St. Patrick's Day, enjoy spring break, and we'll talk to you next Monday. Thanks.